Virtuix Holdings, ticker VTIX. Q1 2027 earnings a double beat. EPS came in at a loss of 22 cents, beating the consensus estimate of a 25-cent loss. Revenue was $767,300, just crushing expectations of $546,383. Management issued no formal quantitative guidance for the rest of the year.
Right, and despite that massive beat, the stock reaction was just brutal.
Yeah, shares plummeted over 22% post-earnings, down to $1.27. So today's deep dive into Virtuix's earnings report and management commentary is tailored just for you. We need to figure out how a company beats revenue expectations by 40% and, still watches its stock completely crater.
I mean, that 22% drop tells you everything you need to know about how the market is weighing their current transition. You really have to look past the headline beat and examine the underlying structural shifts happening across their segments.
Honestly, I'm looking at this report, and the sell-off makes total sense to me. Like, yes, they beat consensus, but actual top-line revenue is down 26% year over year.
Well, on the surface,
It looks like they're just masking fading demand with a few high-priced units. There's like a retailer boasting about record foot traffic while the cash register is practically empty. Like, is the demand actually real?
right, that 26% drop looks terrifying if you just glance at it, but it's actually the result of a deliberate structural shift, not a demand issue. Virtuix finally cleared out its legacy, heavily discounted pre-order backlog.
Oh, so that massive revenue drop is really just the end of those old cheap units shipping out.
Exactly. The new sales are all moving at full market pricing now. That specific change drove a massive gross margin expansion in the quarter, jumping from 17% up to 30%.
Wow, 30%.
Yeah, and management is actually targeting 40% margins for their consumer units moving forward.
Hitting a 30% margin on consumer hardware is solid, especially since they noted consumer orders for their Omni One system surged 150% right after that MetaQuest integration launched.
Yeah, the consumer demand is definitely there.
But that still doesn't explain the wild pivot I'm seeing in these segment notes. How does a company making consumer VR gaming treadmills suddenly land a contract as the lead systems integrator for a U.S. Marine Corps infantry trainer?
It is a massive jump, I know.
And, more bizarrely, they just sold an enterprise system to Tesla for humanoid robot teleoperation. I mean, those are entirely different industries.
They are different industries, but they rely on the exact same underlying mechanism. To understand this, you have to remember what the Omni One actually is. It's an omnidirectional treadmill.
Right, so it allows a user to physically walk, run, or strafe in 360 degrees while staying in one physical spot.
Exactly. So instead of a Marine pushing a joystick on a controller, they are physically running and maneuvering through virtual combat simulations.
Okay, that makes total sense for the military, but for Tesla.
Well, the Tesla application takes that kinetic data even further. Think about how you train a humanoid robot, like Tesla's Optimus, to navigate a physical room or step over an obstacle.
You can't just write code for every single micro movement.
Right? You have to physically show it. Tesla is using Virtuix treadmills so human operators can walk in virtual spaces, and that exact physical motion data is fed directly into the AI training models for the robots. It solves a massive physical space limitation in robotics training.
That kinetic data collection is a brilliant use case. But scaling consumer treadmills, military integrations, and enterprise AI robotics simultaneously, that requires massive capital.
Massive capital they don't exactly have.
Yeah, looking at this balance sheet, I'm seeing the real reason the market panicked. Virtuix is burning about $1 million in cash per month, and they only have $7.4 million on hand.
The liquidity crisis is the elephant in the room here. You combine that $7.4 million in cash with $10.7 million in notes payable.
Which is debt coming due.
Exactly. Add in a $3.1 million deficit in stockholders' equity, and the financial picture gets incredibly grim. They are quite literally 1 or 2 bad quarters away from insolvency.
That's terrifying for investors.
Yeah, they're looking at those numbers and pricing in severe stock dilution or solvency risks just to keep the lights on before those defense and enterprise contracts can meaningfully scale.
The market is betting they run out of cash before they can actually pull this off, which leaves you with a really provocative thought to chew on. What if Virtuix's ultimate terminal value isn't in consumer VR gaming at all?
Right. What if they're actually the foundational hardware interface for training tomorrow's AI humanoids?
Assuming they can survive long enough to see it happen, it forces you to decide what you're actually valuing today, a gaming peripheral company clinging to life, or the literal training ground for the robotics revolution.
It's a high-stakes race against the clock.
Truly. Make sure to follow the show for your daily earnings coverage, and we'll keep tracking the numbers for you.